Have you ever wondered about the pros and cons of investing in gold, stocks, and Bitcoin? In today's world, having a diversified investment portfolio isn't just smart, it's essential. And what better way to diversify than with these three investment options, each with its unique advantages and challenges? We'll be exploring gold, a timeless asset, stocks, the backbone of traditional investing, and Bitcoin, the digital currency that's taking the world by storm. Stay tuned as we delve into the world of investments. Gold, a timeless investment option, has been considered a safe haven for centuries. This precious metal has stood the test of time, maintaining its value and allure, even amidst economic turbulence. But what is it about gold that makes it such a compelling investment choice? On the plus side, gold's stability and value as a physical asset are significant advantages. Unlike paper currency, stocks, or digital assets, gold is a tangible asset. You can hold it, touch it, and store it safely for a rainy day. Its value doesn't depend on a company's performance or a country's economic health. Instead, gold often thrives when the economy takes a downturn, acting as a hedge against inflation and currency fluctuations. Furthermore, gold is universally accepted and recognized. It's a global currency that transcends borders and political systems. No matter where you are in the world, gold holds value, and this global acceptance adds to its stability. However, this shiny metal isn't without its drawbacks. One of the main criticisms against gold is that it doesn't produce dividends or interest. Unlike stocks or bonds, gold won't provide you with a regular income stream. It's a buy-and-hold asset, meaning you make money only when you sell it at a higher price than what you paid for it. Additionally, gold's value is heavily reliant on market conditions. While it often performs well during economic instability, the opposite is also true. When the economy is booming, gold prices can stagnate or even decline, as investors turn their attention to more growth-oriented assets. Finally, let's not forget the costs associated with storing and insuring physical gold. It's not something you can just slip into a drawer and forget about. It needs to be securely stored and insured, which adds to the overall cost of investment. In conclusion, gold offers a stable and tangible investment, but like all investments, carries its own risks. It's a timeless asset with a proven track record, but it's important to understand its limitations and consider them in the context of your overall investment strategy. Stocks, a representation of ownership in a company, offer an exciting opportunity to be part of a company's growth. But what does it mean to hold stocks, and how do they fit into your investment strategy? Let's unravel the allure of stocks. On the bright side, stocks are a gateway to potentially high returns. When a company thrives, so do its shareholders. You're essentially buying a slice of a company's future profits. Stocks also allow investors to earn through dividends, a portion of a company's earnings distributed to shareholders. It's like getting a periodic bonus just for being an investor. However, the stock market isn't always a smooth ride. It can be volatile and unpredictable. Prices can skyrocket one day and plunge the next. This is because stock prices are influenced by a myriad of factors, from a company's financial health to global economic events. Investing in stocks also calls for active management. Unlike parking your money in a savings account and forgetting about it, stock investing requires regular monitoring and decision-making. You need to stay updated with market trends and company news, and sometimes make tough calls on when to buy or sell. Moreover, not all stocks are created equal. Some are riskier than others. Blue-chip stocks, for instance, are considered relatively safe as they represent established companies with a history of stable earnings. On the other hand, investing in startups or smaller companies can be a high-risk, high-reward game. So, should you invest in stocks? It depends on your financial goals, risk tolerance, and commitment to managing your investments. If you're in for potentially high returns and are prepared to ride the ups and downs of the market, stocks could be a valuable addition to your portfolio. But remember, it's essential to diversify your investments to spread the risk. In essence, stocks provide an opportunity for high returns, yet require careful consideration and management. They're not for the faint-hearted, but for those who dare, the rewards can be substantial. Bitcoin, the pioneer of cryptocurrencies, has taken the world by storm with its meteoric rise. This digital form of currency, born just over a decade ago, has transformed how we perceive the concept of money. But is it a worthy investment? Let's delve into the pros and cons. One of the most enticing aspects of investing in Bitcoin is the high potential return. Bitcoin's value has seen an astronomical surge, turning early adopters into millionaires and billionaires almost overnight. However, it's important to remember that the past is not always indicative of the future. Another pro is the increasing acceptance of Bitcoin. More and more businesses, both online and offline, are beginning to accept Bitcoin as a form of payment. This widespread acceptance is gradually solidifying Bitcoin's position in the financial world. Now let's move to the other side of the coin, the cons. The first one is volatility. Bitcoin's price can fluctuate wildly in a very short period. This can be a nerve-wracking experience for investors who aren't used to such high levels of uncertainty. The second con is the regulatory risks. Governments around the world are still figuring out how to deal with cryptocurrencies. Some countries have embraced them, while others have banned them outright. This uncertainty about future regulations can pose a significant risk. Lastly, Bitcoin transactions are irreversible. Once you've sent Bitcoin, there's no getting it back, unless the recipient decides to send it back to you. This can be a double-edged sword, providing security against chargebacks, but also leaving room for potential mistakes or fraud. In summary, investing in Bitcoin can be a high-reward but also high-risk endeavor. It offers the potential for massive returns, but its volatile nature and regulatory uncertainty can make it a risky investment. As with any investment, it's crucial to do your own research and understand what you're getting into. Bitcoin offers a new frontier in investments but comes with its own unique set of challenges. Now that we've explored gold, stocks, and Bitcoin, it's time to compare these investment options. Each of these assets offers unique advantages and challenges, and your choice will largely depend on your individual investment goals, risk tolerance, and investment horizon. Let's start with gold. Gold has been a trusted store of value for thousands of years. It is often seen as a safe haven in times of economic uncertainty. However, gold does not produce any income or dividends. Its value purely depends on market demand. This makes it less attractive for those looking for regular income from their investments. Stocks, on the other hand, offer the potential for both capital appreciation and income through dividends. Investing in stocks allows you to own a piece of a company and share in its profits. But stocks can be volatile, and the value of your investment can decrease as well as increase. The risk associated with stocks is generally higher compared to gold. However, in the long run, stocks have historically provided better returns than gold. Then we have Bitcoin, the new kid on the block. Bitcoin is a digital asset that offers the potential for high returns. It has been the best performing asset class over the past decade. But Bitcoin is extremely volatile. The value can fluctuate wildly in short periods. This makes it a high-risk investment. Bitcoin is also unregulated and relatively new, which adds to its risk. So how do you choose the right investment for you? Firstly, consider your investment goals. Are you looking for safety, income, or high growth? Gold offers safety, stocks offer income and growth, and Bitcoin offers high growth. Next, consider your risk tolerance. Can you handle the volatility of stocks or Bitcoin? Or would you prefer the stability of gold? Remember, higher potential returns often come with higher risk. Lastly, consider your investment horizon. If you're investing for the long term, you might be able to handle more risk and thus, consider stocks or Bitcoin. But if you're investing for the short term, you might prefer the stability of gold. Investing isn't a one-size-fits-all solution. It requires careful consideration of your financial goals, risk tolerance, and the pros and cons of each option. Always remember, the best investment for you is one that fits your unique circumstances and goals. So do your homework, seek advice if needed, and make informed decisions. Let's quickly recap what we've learned today. We've unraveled the pros and cons of investing in gold, stocks, and Bitcoin. Gold, a tangible asset, acts as a hedge against inflation and currency fluctuations, but it doesn't generate passive income. Stocks, on the other hand, offer potential high returns and dividends, yet they come with higher risk and volatility. Then we have Bitcoin, a digital asset that presents massive growth potential, but also possesses significant risk due to its volatility and regulatory uncertainty. Each of these investment options offers unique advantages and challenges. Your choice should depend on your financial goals, risk tolerance, and investment horizon. Remember, investing isn't about chasing the highest returns, but about achieving your financial goals in the most efficient way possible. You've got the knowledge, now it's time to put it into action. Remember, the best investment is the one that aligns with your financial goals and risk tolerance. Happy investing.